Section 11. Pre-approval and financing, connecting buyer assistance programs to financing readiness. In the previous sections, we explored several HUD-related financing and buyer assistance programs, including FHA financing, Good Neighbor Next Door, Section 184, home and neighborhood stabilization programs. Now we move into one of the most important steps before a buyer ever submits a HUD bid: financing readiness. Buyers often get excited when they start searching HUDhomestore.gov. They picture themselves in the home, plan furniture layouts, and start dreaming about ownership. But many buyers make one major mistake. They start shopping before they are pre-approved. In HUD transactions, timing matters. HUD bidding deadlines can move quickly, and buyers who are not financially prepared may lose opportunities before they even get started. Why pre-approval matters for HUD homes. HUD homes are different from traditional MLS listings. They involve electronic bidding deadlines, listing periods, owner-occupant priority windows, strict timelines, bid submission requirements. When the right HUD property appears, there may not be time to organize financing after the fact. The strongest HUD buyers are usually the buyers who are financially ready before the property search becomes serious. A real-world HUD financing mistake. An Arizona buyer named Chris found a HUD home in Chandler that checked every box. Good location, affordable price, FH, a financing eligible, owner-occupant listing period. Chris immediately asked his agent to submit a bid. The problem? Chris had never spoken with a lender. He assumed he could get pre-approved after the offer was accepted. By the time Chris contacted a lender, another buyer with full pre-approval submitted a successful bid and secured the property. Chris lost the opportunity. This is why financing preparation must happen early. What is pre-approval? Pre-approval is a lender's preliminary review of a buyer's ability to qualify for a mortgage. The lender typically reviews income, employment history, credit profile, assets, debts, debt-to-income ratios. After review, the lender issues a pre-approval letter showing the buyer appears financially qualified up to a certain amount, subject to final underwriting. For HUD homes, pre-approval is often expected before serious bidding begins. Pre-approval versus pre-qualification. Many buyers confuse pre-qualification with pre-approval. Pre-qualification is usually an informal estimate based on buyer-provided information. The lender may not fully verify income, credit, employment, or assets. Pre-approval is more detailed. The lender usually reviews documents such as pay stubs, W-2s, tax returns, bank statements, credit reports, and employment information. Because pre-approval is more complete, it carries more weight. HUD agents should encourage buyers to obtain full pre-approval before actively bidding. Documents buyers may need: lenders commonly request government-issued identification, recent pay stubs, W-2 forms, tax returns, bank statements, employment information, credit authorization, debt information. Self-employed buyers may need additional documents such as profit and loss statements or business tax returns. Agents who prepare buyers for this paperwork help reduce stress and delays. Why timing is critical. HUD properties move through strict bidding periods, including owner-occupant exclusive periods, lottery periods, extended listing periods, and bid deadlines. A buyer who waits too long to obtain financing approval may miss the opportunity entirely. This is especially true for HUD homes classified as IN or IE, because those properties may qualify for FHA financing and attract more buyer interest. The best practice is simple: get financing organized first. Then begin bidding. FHA financing for HUD homes. FHA financing is very common with HUD buyers. FHA loans often appeal to first-time buyers, buyers with limited down payment funds, buyers needing flexible underwriting, moderate income households. Common FHA advantages may include lower down payment options, flexible credit guidelines, competitive rates, and compatibility with some assistance programs. However, FHA financing also has limits. The property must generally meet FHA minimum property standards. HUD homes classified as UI or uninsurable may not qualify for standard FHA financing. This is why agents must understand HUD property classifications. Conventional financing for HUD homes. Some buyers may use conventional financing instead. Conventional loans are not government insured like FHA loans and may require stronger credit, larger down payments, and stricter underwriting. However, conventional financing may benefit buyers with stronger credit, larger savings, or long-term goals that make conventional financing a better fit. There is no one-size-fits-all answer. The best financing option depends on the buyer's credit, savings, debt, property type, and financial goals. Why HUD experienced lenders matter. One major mistake agents make is assuming every lender understands HUD transactions. They do not. HUD transactions may involve FHA property standards, HUD timelines, electronic bidding procedures, specialized contract packages, repair escrow issues, government documentation. An inexperienced lender can create delays or confusion. Experienced HUD and FHA lenders understand appraisal procedures, property classifications, repair escrows, and timeline expectations. The lender becomes one of the most important members of the transaction team. The agent's role in financing conversations. Arizona agents must be careful when discussing financing. Under AACR 4-28-1101A, agents must deal fairly and honestly with all parties. Under AACR 4-28-1101I, agents must exercise reasonable care when communicating material facts. Agents should explain financing concepts generally, encourage lender consultation, avoid guaranteeing approval, avoid giving unauthorized financial advice, avoid misleading buyers about qualification standards. The agent's job is to educate and coordinate. The lender's job is to approve the loan. Why financing preparation matters. Today's market continues to challenge buyers with affordability concerns, changing interest rates, competition, and tight timelines. HUD buyers who are financing ready early can submit bids quickly, meet deadlines confidently, compete more effectively, reduce delays, improve closing success. The most successful HUD transactions usually begin with preparation, and that preparation starts with financing. As we continue through this course, we will move deeper into HUD bidding procedures, contract packages, timelines, disclosures, and the practical steps agents must understand to successfully manage HUD transactions from search to closing. Online discussion. Question 1. Why is pre-approval especially important when purchasing a HUD home? Answer. HUD homes often involve strict bidding timelines and competitive listing periods. Buyers who are not pre-approved may lose opportunities because financing delays can prevent timely bid submissions. Question 2. What is the difference between pre-qualification and pre-approval? Answer. Pre-qualification is usually an informal estimate based on buyer-provided information, while pre-approval involves a more detailed lender review of verified income, credit, employment, and financial documents. Question 3. Why should buyers work with lenders experienced in HUD and FHA transactions? Answer. HUD transactions involve specialized timelines, appraisal requirements, property classifications, and government procedures that experienced lenders are more familiar with handling.